Crypto in 2026 is no longer the wild experimental space it was a few years ago. It has matured, faced multiple cycles of hype and crash, and slowly separated real utility from pure speculation. Bitcoin still dominates attention, but the broader crypto market is now much more complex, with different sectors moving in completely different directions. Today we will talk about crypto for beginners, beyond Bitcoin. So before we start, make sure to leave a like and subscribe to my channel. 10. Bitcoin still leads, but its role is changing. Bitcoin remains the most recognized and dominant crypto asset in the world. It is still widely viewed as digital gold rather than a payment system. Many investors hold it as a store of value rather than something they actively use in daily transactions. However, its growth phase is not the same as early years. Bitcoin is now more influenced by global macro conditions, institutional investors, and long-term holding behavior rather than retail hype alone. This makes Bitcoin more stable compared to smaller crypto assets, but also slower in terms of explosive growth. 9. Altcoins are no longer one big category. One of the biggest changes in 2026 is that altcoins are no longer treated as a single group. The market has split into different categories such as smart contract platforms, AI-related tokens, gaming ecosystems, and decentralized finance projects. Some of these sectors are showing real development and usage, while others remain highly speculative with little real adoption. This means investing in altcoins is no longer about everything going up together, but about carefully analyzing individual projects. 8. Utility matters more than hype. Early crypto cycles were driven mostly by hype and speculation. In 2026, utility has become much more important. Projects that survive long-term usually have real use cases such as payments, decentralized applications, tokenized assets, or infrastructure support for blockchain systems. 7. Regulation is reshaping the market. Governments around the world are now actively regulating crypto markets. This includes taxation rules, exchange regulations, and compliance requirements for major platforms. While regulation reduces some of the early Wild West freedom, it also brings more legitimacy to the space. Institutional investors are more comfortable entering regulated environments, which increases long-term stability. At the same time, stricter rules can limit certain speculative or high-risk projects. 6. Institutional money is changing price behavior. Large financial institutions now play a much bigger role in crypto markets compared to retail traders alone. This changes how prices move. Instead of purely emotional retail-driven cycles, markets are now influenced by long-term institutional strategies, macroeconomic conditions, and structured investment products. This creates slower but more structured market cycles compared to the extreme volatility of early crypto years. 5. Crypto is becoming infrastructure, not just investment. One of the biggest shifts in 2026 is that blockchain technology is slowly becoming infrastructure rather than just an investment asset. It is being used in areas like cross-border payments, digital identity systems, supply chain tracking, and decentralized finance applications. This shift means that even if some tokens fail, the underlying technology continues to evolve and get adopted in different industries. 4. Risk is still extremely high in many areas. Despite maturity, crypto is still a high-risk market. Many projects still fail, disappear, or lose value rapidly. Scams, low-quality tokens, and unsustainable projects still exist, especially in smaller market segments. Investors who ignore risk management often experience significant losses. This is why research and caution are still essential, even in a more developed market. 3. Long-term winners are becoming clearer. Over time, the market is slowly identifying stronger long-term players. Bitcoin remains dominant in store-of-value narratives, while a few major blockchain ecosystems continue to support most real development activity. However, predicting winners early is still difficult. Many projects that looked promising in the past failed, while some unexpected ones survived and grew. 2. Crypto is no longer a quick, rich scheme. The biggest mindset change in 2026 is that crypto is no longer seen as a guaranteed fast wealth opportunity. The days of random coins multiplying in value overnight are much less common. Most successful participants now treat crypto as a long-term allocation or technology sector rather than a quick trading opportunity. 1. The real truth. Crypto is maturing, not disappearing. The most important reality is simple. Crypto is not dying, but it is maturing. The extreme hype cycles are becoming more controlled, regulation is increasing, and real utility is becoming more important than speculation. Bitcoin continues to act as the foundation, while the rest of the market slowly separates into meaningful innovation and short-term noise. What do you think about our video? Let me know in the comments below. Before you go, leave a like and subscribe to my channel. Thanks for watching.